Hello, everyone. This next section will be on the actual stock valuations. We've already gone through asset allocations, we've gone through risk assessments and all those things. We've selected a investing strategy, and for the purposes of this section, we're all going to take a value strategy, which is kind of the Warren Buffett way of investing. Now, to complete this next assignment, let me forewarn you before I get into that this next section we're probably going to go slow, very slow at times, and we're going to repeat this over and over again because this is a project that students can get lost fairly quickly. So again, I'm going to go through this slowly so nobody gets lost. You will need, again, that current metrics worksheet, which is the Wednesday after 4 p.m. You keep track of that. It looks like that. Sorry if that's a little fuzzy. Okay, that worksheet, you'll need that with the current metrics here lately. The next thing you're going to need is the valuation worksheets, and you can find those on D2L. If you go to projects and other info under content, right here, new FA 2014 valuation worksheets. And you'll want to print off probably about 3 of those copies. Okay, so let me show that again. And it looks like this. And again, you're going to want to print off about 3 of those worksheets. All right. So once you have that, let's double check to see if we need anything else. You'll need the valuation worksheets, the current metrics. Obviously, if you're watching this, you have a internet accessible device open because we're going to open up a bunch of different websites. And you're going to need that Excel document open, which will go there now. The one other thing I forgot to mention is you will need the IBOTSN chart available, and that, again, you can find that under D2L. And at the bottom there, under projects and other info, the IBOTSN chart. And I would go ahead and download that so you can just pick up on it as a separate window. So the next thing that we're going to need, or what we'll do, is we'll go to that Excel spreadsheet, and in there are a bunch of different spreadsheets, or excuse me, websites that we're going to look at. The first I want you to pull up is this HTTPS stock screener. And this is what we're going to use to find the actual stocks. Once we get there, the other website you're going to want to open is this MoneyChimp website. And the last one you'll want to open is just a Yahoo Finance website. Now, you'll notice that one of these is the front screen to Yahoo Finance, and then another one is a stock screener. Okay, that's what we're looking at here. Now, the reason I recommend you have 2 sheets up, or 2 separate pages of this up, is because if you start searching through this, which you can do, and I'll show you what I mean here in a little bit, but if you start using that, you can get lost pretty quickly going forward and backward. And students have found it's just easier to have 2 separate web pages open, one for the stock screener and one of this page that will actually look up the stocks. All right. All right. So once we have those up, so you have about 4 websites up here. We'll go ahead and start at the stock screener page. And this is what we're going to do. The first thing we need to do is we need to select stocks that we're going to want to invest in. So how we'll do that is on this Yahoo stock screener page, I need to set these metrics to certain things, and this is going to filter through all 100,000 different stocks that trade on the New York Stock Exchange and various other exchanges to find me companies that fit within the certain metrics. And if we go to this, the Microsoft Excel spreadsheet, and we go to the investment project. Okay, you should have filled this out. So I said earlier that I had a score of 7. I'm going to pretend like I did a asset allocation. All right. And that's probably a little bit off. So the next thing I'm going to do is I have an investment strategy picked. Mine was value. And this should be your actual investment strategy. So if you're very low risk, you could pick a bond strategy or something like that. This is going to be the one we're going to use for this exercise. So I would ask everybody set that to value. All right, so the next thing we need to do is pick stocks according to our strategy. So the first thing we're going to do is find 3 large capitalized stocks. Now, large cap means they have a market capitalization of $10 billion and above. So when I go to the stock screener, the first thing I'm going to do is I'm going to set this market capitalization between $10 billion as a minimum, and the maximum I'm going to leave it at any. Then the next thing I'm going to look at is the price to earnings ratio, or the P/E ratio. Now, we learned earlier that the average P/E of the S&P 500 is somewhere around 15. So what we want to find is stocks that trade under a P/E ratio of 15. So I'm going to set this between 0 and 15. Okay. Now we're going to leave it just like that. And so we set market capitalization 10 billion and left the max at any, and the P/E earnings ratio, this one, to 0 and the maximum to 15. And then I'm going to hit find stocks. And this is going to give me a list of all the stocks that trade on the New York Stock Exchange, or whatever stock exchange we have listed, that have a market capitalization of above $10 billion and a P/E ratio of 0 to 15. The next thing I'm going to look for are companies that I've heard of before. Okay. Now, I see one here, AFL, or Aflac Incorporated Common Stock. Now, the thing you want to watch out for is don't select companies that have periods in the ticker symbols. Okay, for this exercise, a lot of times these are companies or stocks that are tracking stocks. In other words, they're stocks within a much larger corporation sometimes. Either way, that's not what we're looking for. So the first one I'm trying to find is Aflac, AFL. Now I'm going to go ahead and switch this view over to another camera that I have. And we'll try to bring this down. All right. So over here, I have the valuation worksheet. Okay. Now what I'm going to do, first thing I'm going to do is I'm going to tape this down because it's about ready to fall off my desk. Okay, the first thing we're going to do is I'm going to write down this ticker symbol, AFL, for Aflac Corporation. Okay, AFL, because I'm going to select Aflac to do a valuation on. The other thing I'm going to do is I'm going to write down this P/E ratio. If you see up here on the screen, okay, we have a P/E ratio of 11.96. Now, since that's under 15, that suggests to me that this stock is undervalued. Now, we're going to stop there because that was our first stock we're going to do. Now, if you do this, if you do Aflac on your sheet and it's later this week, or you're watching this video and it's 2 years from now, all these numbers are going to change and they're going to be different. That's how I know you can't cheat off this, because you can't use the same numbers. They'll have changed by the time you do this. So you can go through this with me, but understand none of your numbers are going to be the same as mine. So the next pieces of information I want to fill in first comes from this IBOTSN data, or that IBOTSN chart. Now this information will actually stay the same. So once you have this, you can just keep using it. And I'll go ahead and pull this up. Whoop, that's not the one I wanted. So I pull out the IBOTSN chart, and here's what I'm looking for. We need to find compound annual rates of return for large cap, small cap, and mid company stocks. Now, IBOTSN and Associates is a analytics firm that keeps track of all these rates of return and has done so over the last 70, 80 years of these different companies, and it gives us an average rate of return, so we have something to compare this to in the stock valuation. So I'm going to start writing down this information, and I'm going to write it up here. So for small cap, I'm going to take this from the IBOTSN chart, and it says 12.7, okay, is a historical rate of return that small cap company stocks have earned. The next one, mid cap, I've put that down here and added that, and that is about 11.4. So I'm going to write that down up here. And the last one I need is large cap, and that is 10.4. So we're going to go ahead and write all that down. You can see it there. Now, the next piece of information we need is actually on the right-hand side of that page, and it's right up here, and it's the risk-free rate. And the risk-free rate is actually going to come from those daily metrics or those weekly metrics that you've been keeping track of, okay? And they're going to come from down here, the 91-day T-bill and the 10-year T-note. Okay, that's going to give us that information. So long term, we know has to be longer than a year. Now, when I took this the other day, the long term or 10-year Treasury note was 1.37. So I'm going to write in the long term 1.37. The next number I need is the short term or the 91-day T-bill, and that is 0.27. So I'm going to write down here 0.27. Right there. I know it's a little tough to see on this screen. So again, that comes from your daily metrics, and we went ahead and entered it onto that valuation sheet. Let me see if you can see that a little better. Nope. All right. Once we have that, we're going to go back to AFLAC. And I'm going to see if I can't find a pen. All right, so we've entered in AFL for the ticker symbol, and we've entered in 11.96 to the P&E. The next piece of information we need is a benchmark on comparable return. And that over here, if you can read this, it comes from the IBOTSN chart. Up here shows you the source of where to get this information. So we know that AFLAC is a large company stock, large cap stock, and that's where we get this information. So I'm actually just going to pull this down from right up here. From the IBOTSN chart, we learned that 10.4 is the average rate of return over the last 70 years that large company stocks have earned. Next piece of information I need is the risk-free rate, okay? And we get that from those daily metrics. It says daily MBA there, okay? Now, from here on out, I'm going to have you cross off the short-term rate. We're not going to use that for the purposes of this class. We're just going to use the long-term rate, which is 1.37. So I'm going to go back over here, and I'm going to enter in 1.37. The next piece of information I need is the beta coefficient. So now I'm actually going to go to Yahoo Finance. Now we're not going to use the stock screen, or I've written down the ticker symbol. We're now going to go to that other screen, or other foot, or excuse me, other site. So I'm going to type in AFL in the quote box here, and the first thing I get is Aflac Incorporated. I'm going to click on that and start pulling down information. Again, what I need here is the beta, or beta coefficient. We learned how to read beta. The beta of Aflac is 1.10. We're going to go ahead and round up and put 1.11. So I'm going to enter that in here. Okay. Now that means Aflac is slightly more risky than the market overall. Okay, because it has a beta of 1.1. If it was less than 1, it would be less risky as the market overall. If it's 1 exactly, then it would be the same risk. So now that I've filled in all this information into that worksheet, okay, I need to find the discount rate, and that's where I'm going to go over to this calculator. So I'm going to, at the capital asset pricing model calculator, I'm going to go down here and I'm going to start entering in this information. So the first thing I need is return available on an appropriate benchmark. I get that from up here. That would come from that iBotson data, okay? And that is row 3, okay, on the worksheet, row 3 right here, benchmark on comparable return. So I'm going to enter in 10.4 into the calculator. The next thing I'm going to enter is the risk-free return available on a risk-free investment. Okay. I'm going to enter in 1.37 from the worksheet. And the last thing I'm going to add in here is your investment's beta. And that was 1.11 from the worksheet. I hit calculate, and I get a risk-adjusted discount rate of 11.39. So I'm going to go ahead and come over to here and enter in 11.39. And I'm going to go ahead and transcribe this down to the next column of calculations. So I'm going to write the discount rate in the 2 spots there so I don't get lost. Next piece of information I need is the earnings per share TTM, or EPS TTM. TTM stands for trailing 12 months, and it tells me I go to Yahoo Finance to find that information. So on this first screen, if I go down here on the first quote page, it says EPS TTM, earnings per share trailing 12 months. And Aflac has $6.07 of earnings per share for the trailing 12 months. The next piece of information I need is in row 9 is the earnings growth rate for the next 5 years. I'll say it again, earnings growth rate for the next 5 years. Now, on Yahoo Finance, on this sheet here, you'll see Aflac. Where I'm going to go is on the left-hand side, I'm going to go down here to Analyst Estimates. That's what I'm looking for. So again, on the left-hand side of the screen, I'm going to go to Analyst Estimates. Once I'm on analyst estimates, I see it right there, I'm going to scroll down. Unless my computer freezes up. Oh, there we go. Okay, so just about to the bottom here, we see growth estimate. So again, we're under analyst estimates. Scroll down, and you get the growth estimate for the next 5 years per annum, annually. And in this first column is Aflac's growth rate for the next 5 years. So it's 9.30%. So I'm going to go ahead and enter in 9.30. The next piece of information I need is the leveling off rate. And for the leveling off rate, for the purposes of this exercise, we're going to put leveling off to 3%, which is approximately inflation, or what we think is the average inflation rate. Now, if I were teaching this in a different corporate finance class, I would say the leveling off rate is probably at the minimum 3% and at a maximum of 5%. Again, for this class, don't worry about this. Just set it to 3% for everything. But again, it would depend if we were doing this sort of in reality. We'd look at this and say, well, is this company in the startup, growth phase, maturity phase, or decline phase of business? And then if it were in the growth phase, we might set it to 4% or 5% as a leveling off rate. But again, for the purposes of this exercise, we're just going to always set it to 3%. Okay. Now that we have all this information, I'm going to go back up to the top here, and then I'm going to go over to back to the discount rate calculator that we did. Now, I remember I had this at 11.39. The next thing I'm going to do is I'm going to hit this arrow and go over. And we're going to enter in all these numbers then into this calculator. So our earnings per share for the trailing 12 months is $6.07, as we see here. So I'm going to enter that in. And earnings are expected to grow at a rate of what? And I'm going to enter in 9.30. Okay, that's what analysts expect Aflac to grow by for the next 5 years before leveling off to an annual growth rate of 3%. Now, we're going to leave this discount rate right here. That's going to stay the same. Okay, because that transferred over from our previous calculation. Next, I hit calculate, and I got a stock value per share of $96, and this is the intrinsic value. Okay, this is line 11, or row 11, is $96.47. Now, this is the important part. Okay, again, I entered in $96.47. This intrinsic price is essentially what we think the stock is worth based on our calculation. So we think it's worth $96.40. When we go back to Aflac, we're going to see how much it's currently trading for on the stock exchange. And we see right now that Aflac is trading at $73.35. Go ahead and write that down. So in essence, what we're saying is we think this share of Aflac, the shares of Aflac are worth $96, but they're currently trading at $73.35. So if we think it's worth $96, but we can buy it for $73, you would ask yourself, do you buy it? And the answer hopefully is yes, you buy it, because you think it's worth $96.47. Now let's think about real estate here for a second. If you're a real estate developer or dealer and you can buy a house that you've figured could be worth $200,000, but you can buy it at $150,000, what do you do? And most real estate developers would tell you you'd buy the property at $150,000. You might fix it up a little bit, do something like that, but then you'd go out and within a short amount of time try to sell the property for $200,000. Okay? And see if there's not a market there for that. And that's how you make money sort of flipping real estate. Well, the same is true with stocks. You buy an undervalued stock at $73.35 and wait for it to go up in value to $96.47. Okay? So we found Aflac to be currently undervalued. The next thing I'm going to do, since I'm going to write next to this, buy. So I would buy this large cap stock. So I'm going to go into my Excel spreadsheet, and for a large cap company, I'm going to start entering in this information. So for the ticker symbol, it's AFL. Okay, we got that from up here. The P/E ratio is 11.96. And the intrinsic value is $96.47. Its current price, let me arrow over here. Its current price is $73.35. The only thing I need to enter then remaining is the number of shares to purchase. Now here's what you're trying to do. You're trying to zero out this amount remaining. So if you divide this by 3, that's about how much money you have to pretend to buy these shares of stock. So I'm going to type in 2,000 and leave it at that. And now I have $133,000 remaining to buy more stock. So I'm going to start back over here. And I need to find another large cap stock. So I'm going to go back to the stock screener. I have all my metrics set for the large cap. And I'm going to go to the next 20 and see if I find a company that I've heard of. Again, stay away from these stock tickers that are this long, and stay away from the ones that have periods in them. Try to stick with companies that you've heard of before. Now you'll see Apple is listed here. Okay, we're not looking, this is Apple. These are tracking stocks, so we're not going to do those. Apple's ticker symbol is AAPL. And there it is. Well, I've heard of some of these companies, American Airlines, heard of American Express. These are okay. I'm going to go ahead and pick Apple, though. And we'll see Apple Incorporated's ticker symbol is AAPL. So I'm going to go ahead. I'm going to go to my next sheet. And write down the ticker symbol, AAPL. Now I'm going to go to this other Yahoo page, and I'm going to enter in AAPL.